Tom, your optimism and bullishness have stood out really this entire crisis, and you've been right when it comes to buying the dip from the March lows. Why are you still optimistic and bullish?
Well, I mean, we've had a lot of tape bombs today. So I think it's understandable that markets are nervous heading into election day and COVID cases are rising and we didn't get fiscal stimulus. But, I think besides the short-term sort of setbacks, I think the setup over the next 6 to 12 months is still really constructive because we have an economy that's in the early stages of a recovery. There's a ton of cash still on the sidelines by investors. And from a credit perspective, I think the credit outlook is still quite good because interest rates are at levels that are still good for businesses. And and it looks like from a both investment grade and high yield perspective, defaults are actually improving. So if you have a positive credit backdrop, a recovering economy, lots of cash on the sidelines, I think once we get through this sort of choppy 1 or 2 weeks, there's big upside in equities.
But isn't the concern, Tom, that it could be more than a few weeks? I mean, we're looking at a really strong uptick in cases, both in Europe, which is already starting to see some lockdowns return, and the United States, which even if we don't have that political appetite for lockdowns and we start to see it regionally, don't you think it'll have an impact on consumer behavior and ultimately the recovery, which was already pretty uneven?
Yes. I mean, I think people need to take COVID pretty seriously. I mean, it's super contagious. Hospitalizations are picking up. And I think we're at the point now where in the states, remember, there's really 22 states where this is near all-time highs. They're already starting to see the reaction, mask compliance improving and curfews being implemented. So the steps needed to keep this from becoming exponential are underway. And if you look at the Northeast or even Florida, California, Arizona, Texas, cases are picking up, but they're not surging. So I think we've got consumers that understand what they need to do, and that's good. I'm not trying to be dismissive of coronavirus because I think it is quite dangerous. But I think in the U.S., hospitalizations and deaths have been a lot lower compared to the other waves. And I think that's one reason why it's still not too late for actions to actually have good results.
Tom, I get the bullish case on a 12-month outlook if we get fiscal stimulus, if we get a vaccine and still have loose monetary policy. But what about the short term? What if 70,000 new cases per day, no stimulus, and a delayed or contested election result all play out for the next week or two? What level of short-term downside could we see?
Well, I mean, cases are, Wilfred, you're right. I think cases are going to pick up. I mean, they could hit 100,000 pretty soon. But the rate of hospitalization is still around 1%, which is 1/4 of where it was in the summer and like 1/13 where it was in the first wave. So I think we're going to start to at least be more sensitive to more hospitalization utilization. But as long as those stay muted, I think we're okay. But you're right. There's other stresses in the next couple of weeks because, we got an election where the outcome may not be decided, although polling really seems to be solidifying here. And, I know markets don't like uncertainty, but at the end of the day, if we're talking about volatility for a 2-week period and investors want to think about 6 to 12 months, what they really have to think about is, where are good entry points? And today, with the market down nearly 1,000 points, a surging VIX, I mean, these are usually the levels that you think would make sense to start putting some risk on into your portfolio.
Shepard Smith here. Thanks for watching CNBC on YouTube.